JBlog, 20th of December 2009. The end of 2009 is quickly approaching, and 2010 is ahead of us. And there are very diverging opinions on what happens in 2010. Anything from 5% GDP to 1% GDP, double dip recession to everything is fine and we're going back to the 2007 and before. CNBC is definitely very optimistic, as they always are. Other places are very pessimistic. Me, I find myself more on the double dip side of things than the boom side of things, simply because I don't see the boom as of yet. I see the stock market that went up, but I don't see the economic fundamentals that accompany it. Here's a chart that I believe is most important to look at this point, and I have my eyes stuck on this every day. Now, and this is the US dollar index, which fell basically since the upswing in March. The US dollar went down and has been selling ever since, until this point here, the beginning of December, and it has made this very large up spike. Actually, I would say it actually shows a little bit overbought at this point. We could be looking at a pullback here. But the important thing to look at is here the 1030 crossover, which has translated this into a bullish chart until further notice. And we've also crossed the 50-day moving average, working towards the 200-day moving average. Definitely a very bullish chart for the time being. How high can it go? No idea. It depends on basically how scared the market becomes. The US dollar is the cautious trade. Selling the US dollar is embracing risk. Buying the US dollar is defensive. So the higher this goes, the more it shows that people are worried about where we are. I have a call. I have several call options on this. That position has been profitable. And I'll have to see. I sold a small part on Thursday right here, take some profits off the table, and if we do get a pullback, I will probably buy some more of it. Oil has been interesting because oil went up along with the dollar, so that's interesting because the two are really inverse of each other. Natural gas has been going up very strong. Gasoline, again, all of the commodities sort of went up Wednesday, Thursday, and that wasn't on a falling dollar. So that's interesting. It might just be a blip, or it might turn into something bigger. We'll see. Gold, of course, had a large pullback last week. At this point here, it was massively overbought. And this is a pullback. Now does this pullback translate into a new bear market? We do have a crossover right here of the 1030. We need to see a follow through on that to see if this is real or if this is just another buying opportunity. But if it stays a long time down here, this might very well signal a problem in the gold market. I like financial news mainly because I look for what the financial news are reporting and to do the exact opposite. Here's a story about gold is the new Tupperware, about gold parties and people getting together and melting down jewelry and turning it into coins. And there's an old adage that says that you should buy investments that are on page 34 of the newspaper. You should sell them when they're on page 1, because then basically everyone is in them. Here's another one: how to turn gold jewelry into gold cash. Stuff like that definitely signals a market that has way too many people in it, and I believe gold could very well be due for a pullback further. But as I said, that's where I enjoy reading the financial news more as a contrarian indicator than anything. Most of what they talk about is really garbage. Um, Earlier, there was half an hour ago, there was a story here that Hong Kong, I believe, no, Taiwan, sorry, Japan is going up because of higher oil prices. Now the news story is HSBC drags on Hong Kong. It's not surprising considering HSBC has the largest part of the Dubai debts, so they're in trouble. But the news will always look for the market going somewhere, and then it'll try to come up with some kind of a reason why that is. And fact of the matter is the market is going down because it's going down because people are selling it, and the market is going up because people are buying it. It has nothing to do with higher oil, lower oil. It's all a lot of nonsense. Looking at the overall market, I've been commenting on this New York Stock Exchange Composite Index not making new highs. There's actually a bit of a decline here, and a flat bottom. So this is a descending triangle possibly. It's not quite clear what it does, but I did find it interesting how we have this drop, then we have a few days of rise. We got a big drop, we get 3 days of rising, we got a drop, we get 5 days of rising, we got a drop, and these drops are almost all the same length. So I just thought it was curious. Not that it means anything, I just, it's one of those things you go, this is interesting. So that's one to keep an eye on. Again, do we get new higher highs? I'd actually be looking for the highs to be broken as being a possible start ushering in a new drop. That has happened several times over the last 2 years where a high was broken, all of the bulls jumped on board, and then the market changed direction and went exactly the opposite. Something it's not supposed to do, and that has been happening so much in the last 2 years. It's quite interesting. VIX still very low. There's very little in the way of concern. This market is not concerned. This market is quite happy being where it is. There's nobody's buying any risk. Nobody's paying for insurance against their positions. There's a contention, cocky, really, a certain arrogance about nothing can hurt me. Is, as I said, it's just one of those things you look at, and if that feeling goes away, then that could be replaced with fear very quickly. So we'll see how that goes. Outside of that, going into the subsectors, just very quickly scanning through here the S&P we've looked at. Materials, a little bit of a breakdown here last week in the materials. Energies is pretty ugly. Financials, pretty ugly. Industrials, so. The one that gets me most, I think, is technology is strong, but the one that gets me the most is consumer staples. Consumer staples has rolled over. It's potentially downturning here. Yet, if we look at consumer discretionary, it's just flying. Now, why would stocks that are based on discretionary spending go up while stocks that go on normal spending go down? Makes no sense whatsoever. It's just one of those things where things just do not make sense right now. But we'll see how that goes. Anyways, that's all I have for today. I'm just watching and happy short, happy being cash. Have a good week, make lots of money, and all the best. Bye.